Good morning, everybody. Welcome to the Lock in Your Success Options Trading for Income Weekly Update for December 29th, 2014. It's the last one of the year, so we'll see if we can make this good. Before we get going, we would like to remind you that the presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please note that the risk in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And also, please note that we are using hypothetical computer-simulated trades in the presentation. However, they are real-time, and they're believed to be as accurately represented as possible. Okay, before we get, if you're watching this on YouTube or some other venue, come on over, check out our website, look at our programs, the M3 Bearish Butterfly ROCK, M21 group coaching and trading triangle programs. Join our mailing list, get your free report, 7 secrets to becoming a successful trader. Sign up for this free weekly webinar and get our emails that are related to it. One thing I would like to note, if you received our newsletter last night, my wife Sherry and I have decided to start another company, and it's going to be marketed under the Financial Freedom Classroom. It's we're just starting this out, and we're going to start by doing webinars on Thursday nights at 7:30 p.m. Eastern Standard Time. We're going to eventually have our website up. We're going to have a blog. We're going to be able to record and post those kind of like we do here on the trade update. First meeting is actually going to be on the holiday, January 1st, 2015. We're going to talk about all kinds of financial things and how to create financial independence. We'll talk about creating multiple income streams. We'll talk about investing in real estate, starting businesses, how to save retirement, all kinds of stuff like that. Anything financial. We'll also talk about the mental game of becoming financially independent, which is very important. So if you're interested in becoming more financially independent, bring your questions. The link here is in the newsletter. It's right here on the slide, so you can kind of just copy that down if you'd like to, and go from there if you'd like to attend. So we'd love to have you there, and feel free to email your questions. And with that, you can also stay tuned for our programs currently under development, because we're still intensely working on, especially this advanced position management program, which is going to be, I think it's going to be taped in the middle of March right now, beginning to middle of March. I actually do have the dates for some people. We will be doing a workshop like we did for the M21. We're going to have people there live. We can't hold a lot of people, but hopefully we'll be able to hold 5-10 people. If you want to come down and see the taping of that and be involved in that, that would be great to see you guys. So just kind of keep that stuff in mind. All right, let's take a look at the markets and what's going on there. Oh, hold on a second. I have a couple of questions. Let me open up my questions tab. Recently, I mentioned that if experienced, you can do an efficient M3 by doubling return without increasing capital. Can you please speak to this? Yeah, that's going to be part of the advanced position management program that we're coming out with. It's a matter of getting out of the mindset of having to do butterflies and verticals and that type of stuff, and just kind of getting into a complex position. If you do that, you can literally be much more efficient with your capital and do much better in the market. So we're going to be covering that in the APM or Advanced M3. I'm not sure what we're actually going to call that course yet, but we're going to be dealing with the M3. How to get more out of all the trades, the M3, the Bearish Butterfly, the ROCK trade, how to convert back and forth between them without getting into butterflies, stuff like that. I do not have a cost yet on the program, so I'm working with SMB on that. I think the other one was in the $1,000 range. It's probably going to be in that range there, but I'm not sure on price yet. All right, and then I also just have will we have a New Year's up move or down move? We kind of look at that and we look at the charts. And thank you, Jens, for your comment there. That's great. Okay, so let's take a look at what's going on with the Russell. We had another week. We had another 25 points up. I don't think that was a real big surprise. We were saying last week that there's a really good possibility this is going to shoot up into the 12-15 range. So here we are. up at 1215. As of right now, we are at all-time highs on the Russell. Would I call this a legitimate breakout? No, I probably would not. We got the time of year which we typically have grinding up markets in December, so this is really nothing unusual from a yearly standpoint. It's a little unusual where we came from to get this aggressive move in December and then have the grind. Now it's a little bit more challenging, but this grind up isn't that unusual. To break out a little bit, to ignore technical levels isn't terribly unusual in this environment. It's low volatility. People are just pushing the market around. That said, we do have to respect the fact that we are at all-time highs. We are over our resistance levels. And that's not only true in the Russell, it's also true in the SPX. It's also true in the Dow. The NDX has been lagging a little bit. If we come to the NDX, we would expect the NDX to come up and touch these highs. That being the case, if we take a closer look at this, we still have, I don't know, about 35 points or so on the NASDAQ before we come into the highs. That, to me, would imply that the market is going to try and push a little bit higher. And if the market is going to turn around, it's likely going to turn around when the NASDAQ challenges these highs. If the NASDAQ just keeps going and pushes up over the highs, we could get some sort of an extended move. My thoughts would be more something like this, is we get another 30, 40 points on the NASDAQ, and then that backs off, and it backs the other indices off with it. So, depending on the timing of that, let's see, what are the futures at now, right? So we're down a little bit for the day. Not that means anything for the day, but we're currently down right now. But depending on the timing of that, assuming the markets don't turn here, if we break support here on the markets, in other words, the Dow, the SPX, and the Russell come down underneath, I'd call that a little bit bearish and think that we may actually be heading down sooner than I thought. But I think the more likely move is for us to push up maybe another 15 points into the 1230 area, probably in sort of a sideways grinding fashion, and then probably back down. I would think before January expiration, probably somewhere in the first week of the year or so, maybe even Friday, who knows. But I would expect a little bit further of a grind up here, possibly as high as 1230, and then for us to back down. And I would say probably into the 1190 range we might see before we expire January. So those are my thoughts on the market. A little bit unpredictable in this environment. Realistically, a little bit of bad news is going to drive stuff down. We're low volume, grinding market, poor execution. This is the time of year. It happens this time of year, and that's just the way that it is. If you've been trading for a while, you'll just kind of get used to it and realize that, hey, December's a grinding up month. I had bullish verticals on when the market was down here at 1150 because December 9 times out of 10 is going to go up. So no big surprises, and those are my thoughts going forward. Let's take a look at where we're sitting with the trades with this fairly large move. So if I come here, let me just go to Back Trader. Let's go to Friday afternoon. And actually, let's go to the beginning of the week because I want to take a look at the January Bearish Butterfly. This finally got some action. We've been sitting in this trade for, oh gosh, I don't know, since it started, not doing absolutely nothing, and finally this week it kind of pushed us over the edge. So looking at this on Monday, let me just look at the T-log to make sure I didn't make any adjustments early. So I did. So if we looked at it on a Monday morning, we would have just been sitting in, actually let's go to the Bearish Butterfly. It would be nice if I was in the right account. Right, yeah, so nothing happened on this until 12:24. So let's go to the 23rd, 24th, and I did this kind of midday because we had that half a day. But if we're looking at the position on Wednesday here, and we take a look at our analyzed graph, this is what we're sitting like. We had an entry at 1160, And if you remember, I told you when the market pulls back deep into the butterfly, usually I like to convert this over into an M3 when the market takes off the other way. And hopefully well, it would be good if you actually acknowledged that if you were trading this particular trade and did that, because you'd actually still be up a decent amount of money at this point. But on the website, we're just following the guidelines. So realistically, I could have rolled this, I think, Monday, Tuesday, or Wednesday, because I was right at the 1200 add point. But the reality is I'm in no hurry to add, so I kind of held out on Monday to see if we were going to pop higher or come back. I held out on Tuesday to see if we were going to pop higher or come back. Wednesday we finally popped higher. So I went in here and I added our 1180 butterflies. That actually, I believe, created a delta theta problem. So I ended up rolling the 1180s up to 1200. So let me see if I did. I know I did that. I don't know if I did that this day or not. So let's just kind of go after the market's closed. Yeah, I ended up with from 1160s I went to 1180, 1200 on the trade. And did I do anything else on this? I don't recall. Nope, then that was it. So if we push to Friday, you can see that we are drawing down a bit. We're about a third of the way to the maximum loss number, which isn't that surprising in this size of an up move. And realistically, the market does what we think it's going to do. It stays under 1230. We have an add point at 1220. We might have to make another delta theta roll. I think we probably will, because we're hitting our maximum delta numbers even on Friday. And we'll probably end up in the let's see, we'd be up in the 1200, 1220, 12. Actually, I can't make that roll until we're over 1230. So it looks like we're going to end up, at least for now, in the 1180, 1200, 1220 strikes, which I don't think is a terrible position. If we start exceeding 1220, I think 12. Actually, yeah, if we exceed 1220, I can roll to the 1240. We'll be in the 1200, 1220, 1240. I don't particularly like that position because I think the market's coming down, but that's the position it will put us in, and if that's the case, then we'll go there. But our add point's 1220, and we'll see what we can do from there. And again, in order to make the roll, I actually have to do this. Plus, we're going into expiration guidelines, which actually I should have. Come to think of it, I should have modified this to bring our delta down, which I did not do. But we'll hold this position for today. Since we're under 21 days, I'm actually going to have to, I forgot we're 21 days to expiration. If we hold this level today, we're actually going to have to bring our delta down. So we will be adding into the 1220s, and unless the market comes down, and we will be getting rid of some of these 1180s, possibly going into some 1240s. So we're going to be hitting expiration guidelines here. So that is the story on the bearish butterfly. As far as questions, what's the best upside strategy to take advantage of the recent rebound other than a straight call? Upside strategies, if you want to be safe to the downside, is always good to start as a M3 that's kind of far from expiration. If you are less concerned about the downside, a straight bullish vertical is a very good high probability trade. So if you want to take that risk, I took that risk with the market at 1150. I thought that was a good call. On a lot of my positions, I put my bullish verticals on to take advantage of that. So right now the market's already up, and to take advantage of a rebound. Okay, it looks like you're talking about the rebound that we had earlier. Yeah. So anyway, that's a good strategy there. Would I consider opening a bearish butterfly anytime soon? Yeah, I think a bearish butterfly in February. Friday gave us an excellent exit entry, and we'll talk about that when we get there, because I did enter a February bearish butterfly on last week. So that's the bearish butterfly. Going to January V Condor. This trade's actually doing very well. They tend to like the grinding environment as long as you don't get too caught up in the initial blast to the upside. Luckily, the market had come down a lot before it blasted up, and we only had to make a minor adjustment to the downside. We bought back one of these 1090s when it was down there. But now we've rebounded. We are pushing our maximum delta numbers, but we're up about $2,000. If you look at the position, there were no adjustments here. If you look at the position, it's doing quite well. So very happy with this position here, no adjustments. And let's see here. Okay, can I explain what Greek trends do we need to follow for Bearish Butterfly and M3? For Bearish Butterfly, there are no Greek trends to follow. For the M3, we'll take a look at that when we get there. So we can do that. All right, so let's, that is the V condor. Let's take a look at our January M3. It's going to be at the top here. So this trade here did get some quite a bit of movement this week. If we come back to Monday, I think we actually made an adjustment Monday, so we'll go before adjustment time. We were here at with 10-1140 shorts, 10-1160 shorts, pushing a little bit over our maximum delta. I mean, you could have made the argument to make an adjustment here, to not make an adjustment. It's kind of borderline. But I went ahead, being a little bit bullish on the market in general, and did these 5, 1160, 1170 verticals, put us into this position here. On Tuesday, you basically did the same thing, right? So Tuesday, the market's up again. Actually, the market's down a little bit, but the market didn't go up, but what happens, especially you start pulling close to expiration, is day by day your delta starts increasing. So even though the market really wasn't up, here at 1500, right, we're pulling minus 70 delta. And if you take a look at our analyzed graph, you can see that we have plenty of room to the downside. Good time to actually stick in another 5, 1160, 1170s. So moving forward into this. We come into this position, I put myself just a touch under minus 50, and that brings us to here. And on Wednesday, let's see, was there anything on Wednesday? No, nothing on Wednesday. And Thursday, I'm sorry, on Friday, let me go a little bit earlier in the day here. What we ended up doing is taking this position, which was the butterflies, which were essentially at 1140. You can see we're well above 10 points over our long strike here. We are positive Vega. We're our delta's okay, our theta's okay, but we're positive Vega, and like I said, we're more than 10 points over, so we're due for a roll up. I rolled this thing up to 1170. So I went 30 points from 1140 to 1170. I put 5 of the shorts at 1180, 5 of the shorts at 1190. I came in here at minus 70 delta, which is actually a little bit more negative delta than I probably should be, but it corrected my Vega and theta. If we take a look at our analyzed graph, I'm still kind of near the edge of the tent. I mean, realistically, I could have flattened this a little bit more. However, I am a touch on the bearish side. I am within M3 parameters, so I'm just a little bit high on the negative delta side. It's going to hurt me a little bit if we continue up, but if we pull back, be very beneficial for us. So this is the position we're sitting in with that M3. Let's take a look at the T-log. And you can see all the moves that were actually done here on the 22nd, doing the verticals, the 23rd doing the verticals, the 26th, here's the roll-up. So that's the T-log on that. Due to poor execution, our live M3 positions are actually doing a little bit worse than what OptionView was showing this month on some of them. Actually, my live position, my big live position is actually doing a little bit better than what OptionView is showing. But some of our other live positions, they're a little bit drawn down, about 1 to 2% difference. Tough execution this month. So if you're timing things well, then you probably do okay. But if you're not, you might be a little bit under this. All right, so that is that. So talking about Greek trends, what we want to know on an M3 trade is not just, what is my gamma, what is my theta, what is my delta here. I want to know what's my delta, theta, and gamma here. I want to know what this line is going to do when I get here. So, we take into consideration when we start talking about the M3 program is the price moves up, I'm going to drop in volatility, I'm 21 days to expiration, how fast is this T+0 line collapsing on me, and should I do something about it now? That will help me determine if I should do something about it now, or if I should or if I should wait. So, in other words, as I get closer to expiration and the more risk I have of a volatility drop, the more I want to be aware of how quickly I adjust for this. Because every single day, even if the market didn't move, every single day the profile of this T+0 line is going to change depending on, volatility levels, time passage, and what the market makers think, where the market makers think the market's going. So what we're trying to do is, and through experience, to acknowledge or be aware that that shift is happening, so you're not just sitting in this position, in this position here, doing nothing when your risk is starting to increase and increase on you. So that's essentially what we mean by monitoring the Greeks and the Greek trends. How is gamma changing as price moves? How is volatility changing as price moves? How is my theta number on this line? How's that changing as that moves? So that's kind of what we are talking about. How much negative vega do I like in an M3? It's going to depend on your position size, and it depends a little bit on how fast the market's moving. If the market's grinding up, I like to hold more negative vega. So in a $50,000 position size, if we go back we'll go back to the 23rd here for a minute. See, I'm holding around 100 negative here. Realistically, if the market's really moving, I'll actually let this go positive a little bit, like it was really moving earlier in the week. If the market is really just kind of grinding, I want to start holding more negative vega, and if the market's more normal, I'm okay anything below zero. So it's a little bit dependent on movement. I think in general, if you want to do a general guideline, then I would say a position this size, anything under minus 10 vega, is something that should probably be addressed, and I guess that's more important as you get closer to expiration. When rolling up a butterfly, how do I place the trade? Toss will allow us trade. Yeah, right. So you do it one at a time. So it depends on what's going on. If I'm rolling an M3 trade, I actually usually do it as condor orders. So I might roll, if I go to Friday, if I wanted to roll this trade, for example, I could pick where I want to go with the position. And if I wanted to have, so I would do all my analysis first and say, hey, where do I want to go? And then I figure out the best way to get there. If I'm hanging too positive delta, if I had too much negative delta, I would probably roll up the lower side first. So I might do a condor order here. Plus one. If I say I wanted to roll 20 points, which is not what we did, but if I wanted to roll 20 points, I might do a condor order, and that keeps me relatively flat delta. That's if I was too much a negative delta, and then I could run a condor order on the other side. If I wanted to do this side first, I can do the same thing. If I wanted to put my long strikes at 1220. Right, I could do this, and then I could take this side up. I don't know what strikes we'd be at, but I can do something like that, or I could actually do this in a broken wing butterfly type of thing if I didn't want to change my delta a whole lot. Right, so I could move from here to here, have virtually no delta change, correct my vega, and I'd be in a relatively safe position if I could not finish the roll. Right, so there's nothing wrong with this position, and this is the type of stuff we talk about in an advanced M3 class. I could wait maybe for a pullback, roll up the rest of this, roll up the downside, but this is just stretching my position out, keeping relatively the same delta and fixing like Greeks. So essentially we would do that. I mean, as a beginner with an M3 trade, you might want to start adding your butterflies and doing as little, like if you have more than one position on, if you have one position on, you're kind of limited. You have to add and then probably subtract, take out your other one. So if the market's going up, I would tend to add first and then sell off my other butterfly. Bearish butterfly situation, you can do the roll-ups this manner as well if you want to, or you can Usually if the market's going up, I buy first, I go excessively negative delta, and then I sell. So I buy, then I sell. Because the reality is, like if I'm in a bearish butterfly situation and the market's going up, and I want to buy a 1150 butterfly and get out of an 1130 butterfly, the reality is if the market's moving up fast, I get a better deal on my 1150 butterfly. And even if the market doesn't come back, the 1130 butterfly is already kind of destroyed, and you're not losing so much on that as if you would lose if you did it the opposite way. So that's what I usually do. So other than large capital outlays, are there any other disadvantages using IWM stock in the M3 versus IWM calls? The only other disadvantage that I would say using the stock rather than the calls would be that you don't get the Vega kick if the market comes down. In other words, you're a little bit more sensitive to volatility when the market reverses on you. But realistically, I like using the IWM if you have the capital over the calls. If you have the capital, and capital is really not an issue, I do like using the IWM. So that would be a good thing. If you want to enter the stock in option view, you can just enter it up here, however much delta you have. So you can just enter, if you buy 3 shares of stock, you can just put 3. It's going to just change your delta by 3, straight up. So that's how you do that. And you can analyze it as stock, right? Because you can do one Russell Butterfly and however 10 shares of stock, and you can just put a 10 in here, and that's going to correct your delta because it's just a 1 delta per share. All right, and now I can't get it out of there. If you're just watching the example I just did that example to show how to roll the position up. So it was just the butterfly was just a temporary measure and rolling that up. That's all. This is the actual position right here. So and this is where we sit as of Friday in the morning. Okay, so we need to quickly go over the other positions here. I have a January ROCK trade. I ended up I did essentially the same thing earlier in the week, adding verticals to the position. On Friday here, I ended up rolling this into a ROCK position. So I came up, the market was, if I just go half an hour earlier, I'll show you where I was. But let's just go to 1430. This was the position on Friday before the large adjustment, but after the adjustments of the week. So during the week here, we were just doing 1140, 1150 verticals, and then 1150, 1160 verticals to put us into a position that looks like this here. Obviously, I'm way, way, way over my long strike here. So I was actually okay Wednesday from a Vega standpoint and everything, but now I'm way over my long strike. With a ROCK trade, we do our entry test, and we go into a ROCK position if we can. So here, I ended up doing an 1190, 1230, and started entering into the 1250s in a ROCK trade, and that position currently looks like this. So from here on out, this will be traded as a ROCK trade. We have a $10,000 profit target, $10,000 maximum loss. We will, with the continued up move, we'll be scaling into the 1150s. So this should be a fairly good trade. Should be a fairly good trade. All right. If you want to take a look at the T-log, this is kind of what happened over the week. We had 4 verticals on Monday, 5 verticals on Tuesday, another 5 verticals on Wednesday, and we did the big switch over here on Friday. That is the ROCK trade. I know there's another M3 question on last Wednesday. Okay, actually, so January M3 last Monday. Let's just look at that really quick. I don't know if I was in something unbalanced. So I don't think I had any trades Monday except for maybe some verticals. Yeah, so Monday all I had was a vertical trade on the M3 on Monday. So I'm currently in a 1090, 1140 butterfly. I'm on 1140 butterflies with 1160, 1170 verticals, right? So I'm not sure what's going on with that. But that's, yeah, that's where we were on Monday. All right, so that's the January rock, February V Condor, which I forgot to enter last week. I entered on Monday. Our February V Condor, where did I put it? Did I not mark it right? I don't know where I put it. I actually, I'll show this next week, I guess. Let's do the February Bearish Butterfly, which was entered. We'll come back to the V Condor. So let me go to Friday. I think this is a fantastic opportunity to enter a Bearish Butterfly with the markets up this high. I entered at 1190, which is about 30 points under the money. I was able to do that, hold my delta theta ratio. One of the things we notice is our butterflies are still relatively flat delta-wise here in February, even though they're skewed one way in January, basically telling us longer term people think the market is likely to come down, although shorter term it's likely to go up, which I think would be my opinion as well, but that's what the market makers are kind of planning for right now. So this is the position as of Friday on the Bearish Butterfly. Also entered an M3. I entered an M3 down here at 1180s. I actually did 11 butterflies to one call rather than 10. And I don't know why it's showing me minus 108 delta, but that's more than what it was at the time. I have my 1180 calls on with 11 butterflies. Position looks like, oops, I have something caught in here. I must have an adjustment or something. Let me clear. All right, so this is actually picking up on something that it shouldn't be picking up on. Let me close and reopen. The trials and tribulations of option view. Let's see what do we have going on here. All right, so this is showing me, oh, okay. I see what I did is I actually put the V Condor orders in with this account, so I'll fix that. So if we're going back to the V Condor, I put on shorts at 1080. I put on a straddle in here. Well, it's actually not showing it, but I put shorts on at 1180 and at 1280, and then I have a straddle in the middle here that I actually put on at 1180, which this is not showing. So, oh yes, it is. It's showing it here because it's giving me a this should be minus 22, and I put the other straddle here at 1180 right here, which would be minus 1. And that would be the that's the entry for the V Condor. Let me just take out this V Condor so I'll show you what the M3 looks like. I'll go back and correct this later. Apparently I didn't start the new account, I just added it on top of this one. So here is our entry for our M3 for February. Nice flat T plus 0 line, we have plenty of downside room, and we have lots of room to the upside, nice flat T plus 0 line. So that is, that's all the trades that we have right now. So we got the V Condor with a 1280 and 1180 and 1080 shorts, 30-point wings with 1180 straddles, and we have the M3 with 11 butterflies, 1180 butterflies, and one 1100 call. And I get the extra butterflies to balance off our delta a little bit more than what I wanted to. Why did I place my 1180 call at 70 delta? The 1180 call was actually for the V Condor. The call for the butterfly for the M3 is actually at 1100. So So that's the position there. And the last question I have is, yes, this is going to be recorded. You can view it again. It's going to be on YouTube. It'll also be on my website at lockeinyoursuccess.com. Just go to the blog, and it's probably going to be posted tonight or early tomorrow, and that can be viewed there. And that's what we have for the year. So I hope everybody has an awesome new year. And I will be more organized next week. I apologize for the disorganization. We've got a lot going on with the launch of this other business here, and I kind of threw this together a little bit fast. So we will be more organized and settled next week, and get this stuff in the right account and go from there. So have an awesome week, everybody, and hopefully join me Thursday night for the Financial Freedom Classroom. And if you're a member of the Options Tribe, or if you'd like to see the live trade review, that'll be going off at 10 o'clock. So have a great time, everybody, and we'll see you next year.